What up, sir? How we doing?
What is going on, my friend? How are you?
Good. We got our mic fixed. We're looking good. We're sounding good. We're feeling good.
Do you think we're good? I'm very happy to hear that. I've spent like a week working on it, and it turned out it was actually like a really simple fix. So
it always is. It always is.
Yeah, it is. How are you doing? How's your day going?
Day's going good. Week's going good. I gotta say, I'm a little perturbed because the market is boring me at the moment. I mean, we're all making money because we're all going up, but I'm bored.
It's a very different March, or April, May. Like, I feel like this, obviously it's not May yet, but I feel like this 3 months is going to be so entirely different than the last year's 3-month run. You're right. It's a little bit boring. That's a good way to describe it.
Don't make me go back to that. I was having so much fun the last year plus. That being said, I want to open the floor up to you. Let you do your thing. Tell us about your trades, what you've been doing, what you have not been doing, and setups for the next few days. I will give you the floor, sir.
Appreciate that. Good evening, everyone. My name is Brad, and I am the host of Technically Options. Thank you to Spencer and the rest of the team at Benzinga again for allowing me to talk about options trading, specifically options trading with technical analysis. And I might say, well, what's the big deal about that? Why does that matter? A lot of times with options trading, technical analysis is not really one of the things that is used. And if you're not familiar with options trading relies heavily on the Greeks, price action, and movement of the underlying stock. However, I am of the perspective that you can use technical analysis to increase your options trading profits and to be successful from any position that you trade options from. So that's what we try to do on this show. This is our third episode. The first 2 episodes, we kind of got a little bit of our footing, and I had to work out some audio and video issues because there's always something going on with technical stuff. But I think moving forward, my goal, just to kind of give you an overview, is to have specific topics that I'll work through every episode, kind of have a reason for, watching all of the episodes, to kind of start with this topic and then work our way through a couple of different things. I've got a backlog of all kinds of stuff that people have messaged me about, asking if we could talk about this or if you could talk about that. And so what we're going to do tonight is I'm going to explain, we're going to focus on 2 main things. And if you have any questions in the meantime in the chat, I'll try to get to them as I'm working through. Normally what we'll do is, if we have a couple of minutes at the end, if you have a question and you asked it and I didn't get a chance to answer it, just go ahead and throw that in the chat at the end, and we'll try to circle back around to that. But there's 2 main things that I want to talk about tonight. Number 1, I want to talk about how do you find options to trade? How do you actually, because it's a little bit different than just playing, whatever stock gapped up overnight or whatever stock is gapping down, depending on what perspective you like to play the options from. It's a little bit of there's a little difference when it comes to options trading, that you want to make sure you're finding options that have a little bit of action. Okay. You don't want to just play the penny stock that has a very small amount of options, because one of the things that you'll notice real quickly is the options don't always move the way that you want them to move. Okay. So that's one of the things we're going to talk about, is how you find options to play. And then number 2, one of the things that I'm trying to get us to learn a little bit more about is some of these more advanced strategies, as far as just not buying a call or buying a put. One of the things that I'd like us to talk about tonight is what's called a butterfly. A butterfly is a type of options trading strategy that allows you to be a little bit more neutral on a stock. So instead of trying to guess if the stock is going up or if the stock is going down, you could play what's called a butterfly spread, and it actually allows you to capitalize on a very small movement if you think that the stock is not really going up or if it's going down anytime soon. Why would you play a strategy like that? That's a great question. Thank you for asking. So, for example, right now I have a let me actually show you what I have open right now. One of my positions right here, we are playing the weekly expiration of SPY for tomorrow. We are playing the 408, the 409, and the 410 call. Okay. Now, if you notice here on Tasty, this is what Tastyworks is, the platform that I use for options trading. I'm a big fan of them. If you are, I'm primarily an options trader, and so my focus is to find on what's going to give me the best setup for trading primarily options. And I think Tastyworks does that. Not sponsored by them. I'm just a fan of them. So you're looking at Tastyworks. That's what this platform is. And then for all my charting and all of my other things, I use TradingView. We'll flip over to there a little bit later. But for right now, I want to show you this setup here. This is called a long call butterfly. Now, a great thing about Tasty is if you are not familiar with the platform, they actually let you go in here and select the various strategies that you want to try. It helps when you're getting first started out because, as you can see, there's the Jade Lizard, there's the Iron Condor, there's the Strangles, there's Straddles, there's everything that you can do. And these names, I don't even know what a Jade Lizard is, to be honest, and I trade options full time. So a lot of these strategies are real confusing. So what it actually allows you to do is just you can kind of click the drop down box and it'll automatically populate for you what that option is going to do. And so with this specific option, we are doing what's called a long call butterfly. Now, what is a long call butterfly? Again, a long call butterfly is typically when you are going to be neutral with a stock. Now, today is Thursday, which means tomorrow is Friday, and you are looking at SPY. If you are familiar with what SPY does on Fridays, typically, okay, now this is not always, anything I say is not, a guarantee. It can always change. Tomorrow it might run to $1 million. It might tank to zero. You never know with this market. But typically on Fridays, what we see with SPY and a lot of other stocks, if you're familiar, they tend to sell off, or they tend to get real cold, if you'll call it that, after lunchtime. If you're familiar with how the stocks move Monday through Thursday, typically at around 11:30, you start to see volume disappearing, and then it comes back a little bit slowly. And then once we ramp up into power hour at 3 o'clock, that's when we start to see a little bit more action. And then in the good old days of 2020, there actually used to be runners after hours, which is a lot of fun to play too. But, and of course, I'm joking, stocks, of course, move after hours. But the early part of last year, as we were just talking, the early part of last year, it seemed to be that there was stocks running like crazy all the time after hours. And I remember trading until 7:30 every single night just because there was so much action. And I remember getting up early in the morning to play the pre-market hours. And yet it seems like now we have more focused in on just very small windows of time. But basically what happens with this strategy is it allows you to capitalize on that Friday movement. You can play this strategy whenever you want to. It's not just for Fridays. I like this strategy for a Friday because SPY tends to hold to a real small range on a Friday. So with this strategy, with the butterfly, you are saying that SPY is going to stay within a very small range. Okay, that's the goal with this. You are buying to open the 408 call. You are buying to open the 410 call, and then you are selling to open of these 409 calls. So basically what that does is it allows you to have a real small, tight bracket of what you are going to look for with the stock. With options trading, a lot of times you could just basically buy and sell puts, buy and sell calls. And what you're trying to do is you're trying to guess the direction of what the stock is going to do. So if you're buying a call, you are thinking that SPY is going up. If you are buying a put, you are thinking that SPY is going to go down. Doesn't take long to look over these last couple of weeks to see that the market is doing a lot of different things day by day. We can have a market that is running like crazy on a Tuesday, and then overnight, all of a sudden, nothing happens and SPY gaps down 6 points. It's really tough if you are trying to just play calls and puts right out of it from a new type of options trader perspective. Because you basically are only profiting on if the stock does one or the other thing. Now, for example, with this strategy right here, okay, you are buying two calls. You are buying to open, which means you are saying that you want this contract, and you then have the right to, not the obligation to, you're not required to, you have the right to exercise this contract. Now, I'll say this every week because I know people ask this, and I just want people to understand what's my main strategy when it comes to trading options. I am typically trading options just to flip for premium. Okay, I am not trying to flip to exercise the contract. My interest in trading options is not to get the underlying stock shares. I just want to flip the contracts for premiums. That's what I'm doing. So when I play an option like this, for example, this is the 4-9. This is tomorrow's expiration. My goal is not to get these in the money so I can exercise them. My goal is to sell these at a higher premium or a lower premium, depending on which route you're going, than what I paid for. So like, for example, with this 408 call right here, it closed at a range of $1.53 to $1.58. I bought it for $1.20. So right now, going off the high, it's up for one contract, it's up $38. Okay. My goal then is to sell that back to acquire that $38. Now, it's obviously, depending on how many contracts you buy, will raise or lower your profit or loss, depending on which way the stock moves. However, your goal is to capture these little movements, okay? What I want us to understand really, and I know it takes a long time to sort of, what we need to do first is we need to understand that options are not scary. There are a lot of people that have this idea about options that you think, oh my gosh, I'm going to play an option once and my entire account is just going to disappear. I'm going to get called out and I'm going to have to buy $10,000 worth of stock, and I don't want the stock because I don't like the stock, and now I don't have any money to trade with. So what am I going to do? That's one of the things that we have to realize is we need to make sure we are identifying in advance our risk. Okay. Now I want to show you something down here on, actually, let me pull it up in here. I'll be able to tell you a little bit better. Let's do it this way. I'm going to show you what it looks like to play a long call butterfly. And then I'm going to give you the ranges and stuff like that so we can see what it looks like. So basically what we're going to do is we're going to flip over to Monday. We're going to do the 412 SPY contract. So what we will do is right now in my account, I have opened the 408, 409, and 410s. So I'm going to actually mimic those same exact setup. So basically then what we're going to do is you can see right here that you are buying, selling, and buying. That's what this looks like right here. Long call butterfly, buy to open, sell to open, buy to open. That's important because what you want to do is when you are reversing, you do the opposite of that. So if you buy to open a stock or if you buy to open a contract, you are then selling to close in order to collect the profit. This is what you're looking at when it comes to the butterfly. Why, again, are we doing this movement? Because we think that SPY is going to trade in a very tight range between now and Monday. The expiration on this contract is Monday. Our goal is to stay. We don't think SPY is going to go way up. We also don't think it's going to go way down. This is what you're looking to do here. Let me flip over to a really cool feature with Tasty. They have what's called the curve. The curve allows you to really see where your profit and loss is coming from, okay? Now, down here on the bottom, this is what I want to focus on here real quick. So what you're doing here is you have a max profit of basically infinity, which is a way of saying that the stock does not have technically the stock does not have a ceiling, okay? And you don't need to get into like, yeah, there is ways that a stock cannot go and stuff like that. Just technically speaking, okay, the stock does not have a ceiling. It could run to $1 million if it wanted to. So that's why when you see this, you see that there is this little infinity sign, meaning there is an unlimited amount of profit, but your max loss is identified. Your max loss is set up as $163. Now, where are we getting that number from? So again, what we're going to do is we're going to buy the 408 call. We're going to sell the 409 call, and then we're going to buy the 410 call, okay? So what this is going to do is it's going to give you a debit of $1.63, which means it costs you $1.63, which is $163 in order to buy this setup right here. But what it's also going to give you is it's going to give you this really a small range of what you have to capitalize on. Again, your max loss on this setup right here for 3 options is $163 because it's costing you, let's go through this. The 408 call right now, if you were to buy it, let's just pretend the market's open, okay? If you were to buy the 408 call right now, you have a bid of 210, and let's say you get filled at 210. You then are buying the 410 and you have a bid at $1.04. So let's say that you got filled at that. You are now spending what? $3.14 in order to buy those two contracts. However, you have this middle one right here. What is this one? We are selling to open. When you sell to open, the opposite happens. You are collecting you're collecting up front the premium. That's why if you are familiar with a lot of people that talk about they just sell premiums for a living, or if they just sell theta for a living, or any of those option terms, what that means is you are selling the premium and you are collecting that money up front. So instead of buying the contract and then your account being debited, you are selling the contract and you are receiving a premium. Does that make sense? If you have any questions about that, just leave it in the chat. We're just going to kind of work through this stuff here. I want to kind of identify the range of this specific strategy. But again, you are buying to open the 408, you are buying to open the 410, and you are selling to open the 409. This gives you an understanding of a very tight range. So what you want to look for on this is if the price of SPY is greater than 410.63. Okay. Now, why is it that price right there? My voice just cracked a little bit. I apologize for that. I'm still trying to grow up. Maybe one day. The max loss is if it's under 410.63, and your max loss then is the 163. Oh yeah, I forgot to tell everybody. I got my new shirt here just came in. I was messing around on Printful. We've been trying to get for our Discord. We've been trying to get shirts and stuff like that, and finding a good a good vendor to go with. And so I made this shirt, and I wish you could have seen the eye roll that my wife gave me when I put this shirt on. If you can't see it, it says unemployed options trader. Just a little fun way of describing what I do for a living. But what we're doing here is we're looking for SPY to be up over 410. You're also, if it's less than 410, though, this is where your max loss is coming into play. So you want, after all is said and done, you have to remember that your break-even price is going to be your premiums paid plus any broker fees that they charge for options trading. Depending on what your broker looks like, it's either a flat rate per contract, it's either a price to open, it's whatever your broker says that you have to add in as well. So don't forget about that. But our goal with this setup right now is we want this SPY contract setup. We want it to be over $410.63. That's what it comes down to after we add in our premiums, our contract fees, and stuff like that. We want it to be over 410.63. So what happens when it's over 410.63? Now let's go over and we'll take a look at the curve. This is a great feature of what Tastyworks can do for you when it comes to options trading. Again, I'm not sponsored by Tasty. There's plenty of brokers out there that you can use. This is just personally for me over the years what I have felt has been the clear winner of options trading. I think they are the best if you are primarily an options trader. Again, I don't chart through Tasty. I only use them for options trading. What you look and see here is as you are moving farther and farther down the price is where you can see how quickly you are increasing your profit. So ultimately, the goal is you want the stock to continue to go up. Now, you have to remember, it's a small window here. What you're looking at is you are looking at it being it's Thursday at 5:21. Okay, so you have one full trading day tomorrow. And then Monday is your day of expiration. Now, options expire at 4 p.m. on the date that it's listed. There's no pre-market trading on options. There's no after-hours trading on options. It is simply just 9:30 to 4. So you are trying to capture basically 16 hours, 15 and a half hours of movement on SPY over the next 2 trading days. You have to really step back and think, okay, what has SPY done recently? What does SPY do typically on Fridays? What does it do on Mondays? And then factor in why you think it's best to go with this strategy of an options trade. So again, don't get too confused. Oh yeah, somebody said on the chat. Thank you for saying that. You can after hours trade SPY options until 4:15. That is correct. SPY is the one that lets you trade until 4:15. So you do have a little bit extra of a window to trade those, but the option contracts expire at 4 p.m. at the closing bell. So when you are picking out your strategy, you want to use this butterfly strategy. If you are not really convinced one way or another that the stock is going up a lot or the stock is going down, you want to have a real small window of where you need to capitalize on. But you also want to protect if the stock happens to go down. Now, this is where we see right here, this is the other side of the stock. So let's say right now that you are sort of neutral on SPY. You recognize that on Fridays, SPY tends to just sort of stay in a little range and then maybe jump a little bit after 1 o'clock, but most of the time it's staying in a very small range. This is your bucket, if you want to call it. These are your barriers of where you're trying to get that stock to go into. Obviously, you want SPY to run. Okay, you want it to go up, but you also have to remember that there is the possibility that, I know it sounds crazy, there is the possibility that stocks might go down. With the stock going down, though, remember that your loss is already identified. What is your maximum loss on this setup? It's $163. If the contracts expire, if they expire before SPY gets to your target price, the maximum amount of money that you are losing is $163. If the price of SPY is less than $410.63. If it's more than that, that's when you are getting into this unlimited profit. Now, again, I know that's real easy to hear that and then think that, okay, I'm just going to play options because of that option. I hate to use that word twice, but basically a lot of times when people come to me and they say, well, I hear that options have an unlimited upside. And technically, yeah, that is true. They have an unlimited upside. You have the potential to make millions of dollars. However, you have to be a little bit more realistic, just like you would be if you're trading commons. You have to be realistic that the stock is actually going to have a ceiling. There is going to be a specific range in which that stock is going to trade, and it's not necessarily going to go up $1 million, especially in a day. That's another thing that comes into play with these option contracts. You have to look you have to look and see when the expiration is. You have to look and see what the premium cost is for the contract. You have to kind of see, you have to map out a little bit more what is going to happen with this underlying asset in order to either increase or decrease the chances of you having a profitable stock. This is a great way to take advantage of a stock that's not really moving a lot, and kind of with this market being a little bit it's tough to capture if you're swing trading. Man, my heart goes out to you. It's tough right now. The movements are so sporadic. The best thing I think to do is to day trade as much as you can. Again, if that's not your type of setup, if you don't want to do that, I'm not telling you that's the only way that you can make money right now. What I am saying, though, is it's best to capture on these small little movements, okay? I think a lot of times what we can allow ourselves to do, me personally as an option trader, or if you are a commons only trader, you view it this way. I think it's real easy to think, well, this stock ran 110% the other day. Or better said, this stock ran 110% last year. Therefore, it's going to run 110% again. So I'm not going to take my 20 or 30% profit. My goal on SPY contracts is 10 to 30%. Now, again, I am playing multiple a day. I'm trading 5, 6, 7, 8, 9, 10 times a day. So I'm capturing small little movements. I'm also buying a lot of contracts. So a 5 to 15 cent movement for me is a pretty substantial win. Also, just the other thing is true too. A 5 to 15 cent drop is a pretty substantial loss. However, I'm real tight with my stop losses and things like that. And luckily, I have the fortunate job, if you want to call it that. I hate calling it a job because it makes it, jobs are, things that you don't like typically. But what I do to provide for my family, let's call it that, I can stare at the screens all day. And so I can capture these small little movements. So if you are not able to do that, if you are not able to watch all day long, that's okay. Don't think you have to stare at every tick. And I actually would encourage you not to do that. I like that I have the ability to do this all day long. However, when I'm behind all of my monitors, I've got all kinds of other stuff going on. So it's not like I've just got one chart up and I'm watching it tick by tick by tick all day long. That's not at all what I'm doing. I have the ability to monitor my positions all day long if I need to. But while I am behind the screens, as I call it, I am doing other things. I am involved with a group of guys in Discord, and we talk all day long. I have other things that I'm doing in order to prevent myself from watching tick by tick by tick, because that's another thing with options is you are going to see these movements and it's going to just all day long. Okay. Especially with something like SPY. You want to really see like how good of a trader you are. And you think in the back of your head, like, I can handle the movements, right? I can handle the ups and the downs. Go buy a Tesla call at 3:58 p.m. on a Wednesday, and then watch what happens the next morning when the market goes ding, 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 and watch what that contract does. And watch those little movements, okay? Because that's what is amplified with options. Options is going to bring out the best or the worst of the stock, depending on which way it's going to go. But we also need to remember, and that's why I was talking about this, not in depth, of course. I think every week I'm going to start talking about one additional strategy to kind of give us a little bit more in our toolbox. Is one new strategy that we can use in order to give us more of a success when it comes to options trading. So we're not just trying to predict the up or the down of the stock, because we're not going to be able to get it consistently. Okay, so here's one thing that I want to talk about. The way that we close these contracts, the way that we take profit. Okay. I am in the, somebody said, lost so much money playing open puts on Tesla back in May. You go down 60% in a couple of seconds. And that's like literally true. Like that's not an exaggeration. Like the movement 60 down, 60 up can happen in the blink of an eye. It's that quick. Now there's also the I don't know if you are, that sense of movement and volatility and action, that's what I'm looking for. My goal is to make as, obviously our goal is to make as many profitable trades as we can. Somebody says, am I looking at the wrong option? I just wanted to see it on my own screen. And when I pull this one up, it says max profit would be $88. Are you doing the buy, sell, buy, Jake? Are you doing the setup that way? Or are you just, you've got to be doing, because on this setup, it should be, are you doing on the calls or the puts? Take a look at that. Because on this one, there should be an unlimited amount of profit. On a setup like this, there should be an unlimited amount. Let me also show you one more thing too. Let me make sure I've got everybody caught up here in the chat while I bring up one other trade to do. One of the best ways to, I'm doing Tasty on my phone too, so I can have a couple of different screens going on at once. Let's see here. Done. Okay. Oh yeah, I see what you're doing, Jake. That was my fault. I forgot to add in the I'm sorry, the second put. I'll come back around. I have another example that I want to show, but yeah, you had it set up correctly there. So buy, sell, buy. Okay. You got to make sure that you have two of the cells. That's where I forgot to add that one in. Let me click that one over. Actually, let's go back and I want to show you one other one. I want to show you what a monthly looks like. No, Jake, that was my bad. You're good. That was my fault. I'll circle back around to that, but yeah, that you had it correct. Let me show you what a monthly looks like. A monthly is going to give you a little bit more of an opportunity to not lose so much decay when you are trying to gauge these option ranges. Options trade two ways. There's weeklies and then there are monthlies. The monthly expiration is always the third Friday of the month. And then a stock like SPY is going to have multiple weeklies. Monday, Wednesday, Friday, they are going to have. Not every stock has a weekly option, but every stock has monthly options. Now, I want you to see the difference in the premiums that we are looking at. This is April 16th. And let's say that we are we're wanting to go a little farther out with our understanding of what SPY is going to do. So let's say, for example, we think that we're going to have very small, choppy movements back and forth with SPY. We're going to see a real tight range. Let me, I think I have SPY pulled up in the background. Oh no, go Tesla. Let's look at this real quick and to give you a little bit of an idea of what we're looking at here. So basically, SPY has traded with this big candle here. There's typically ranges where you can see now there is a little bit of we're seeing a little bit more of an upside with SPY. However, you can kind of see that there's not a big range. It tends to stay in a very identifiable area of what it trades at. So that's another thing to keep in mind too, is like if you're looking at your option chain here and you're thinking, oh man, this 419 call down here is only 20 cents, $20. I could buy 10 of those. Okay. And you capitalize on a small movement. Now that of course is, a possibility. However, do you really think that SPY is going to go to 419 in the next week? I personally don't. I don't think it will be that high. 16th is next Friday. So that's another thing that you have to monitor as well. Okay. So on this, let's do this one here. The 417, the max loss is $36. Absolutely. My voice just cracked again. The max loss is $36. And so that out of pocket is not really that bad. However, take a look at this. Look at how far you have to go in order to get into the profit. Okay, so right now SPY is at 409. Oh crap, I've got the other one still on there. Let me start over. Let me clear all my options out and we're good. Okay, let's go back to 416 and let's show you the 416 just because that works better. Go over to here. Oh, these are my current open positions. That's why. Sorry, there it is. Here is the call that you would be buying. You'd be buying the 416 on 416. Oh, look at that. I didn't realize I did that at first. You'd be buying the 416 for the 416 expiration. It's 49 cents. Okay. So in order for this contract to get into the money, that's what our goal is. You want to achieve maximum potential profit, and that's by getting the contract and the money. You have a very, very long way to go. Okay. Realistically speaking, do you think now that's what you need to do first when you are identifying the options that you want to play? Realistically, ask yourself, do you really think, remove your bias, okay? Remove that we like the stock. Remove all of those other things and ask yourself, because ultimately at the end of the day, what you are trying to do is you're trying to make sure that you are capitalizing on these movements. The goal is not to say, I told you. That's not the goal. The goal is to make good trades. I've been wrong before on a stock, but I made the right trade according to my setup, my strategy, my indicators. That's more important. Like I get it wrong all the time. But thankfully, the system that I have in place helps me from getting it wrong all the time. Really ask yourself, do you think SPY is going to run that much over the next week? With all of the choppiness that we've seen over the last, let's just say week specifically, with all the choppiness, with all the up and down and stuff like that, all of these things that you see happening with the market, do you really think that we're going to see without any sort of, because you got to remember what's happening with a contract that you are playing is if you buy the contract and overnight into the morning and then at market open, the stock has moved not at all. Okay. It closes at 409. It opens the next day at 409. I'm talking about open 9:30 market open. The option lost money automatically. The option loses money. Okay. So when you are buying because you think the stock is going to go up, the stock really has to go up. Okay, the stock can't just move a penny and you're going to capitalize on that penny. What you are looking at here is you are looking for, you need to have, the stock needs to move, because what's happening is you have what's called theta. Theta is the way that the rate of how the option decays, theta the heta, somebody said, that's a really good way of describing it. The option decays automatically overnight. Okay. The option will go down no matter what happens to the stock. I mean, if the stock goes down, it's obviously really going to go down. But if the stock does not go down at all, if the stock is just staying right at where you bought it, okay, if you bought the contract when SPY is at 409, and then the next day SPY is also at 409, the contract lost money. Now, okay, you've already not only you've lost money, but you've lost another day in order to get that option to move forward for you to have a chance of profit. So now you're fighting against theta. Now you're fighting against a contract that you're losing. Now you're fighting against a stock that has no real movement. Somebody said, unless you want to own that stock long-term, you should never hold on to gains like that. Just roll them over, take it further out, write shorts with it. That's a great way of describing what options trading should be. Dylan says, is this Brad from In the Money Trading? Yes, Dylan, I am Brad from In the Money Trading. Just a real quick shout out to our Discord. We are a community of traders that we have about 400 and almost 500 people now. We've been trading together for 14 months. I think most of us have been. We are a free community. We don't charge for courses. We don't charge for subs. We don't do anything like that. Our goal is to bring in traders and teach them how to trade. That's our goal. If you are interested in checking that out at all, go to tradinggrounds.live. And then at the top of the page, you'll see all the links. Trading Grounds is what my trading platform, whatever you want to call it, trading teaching platform. It's tradinggrounds.live. You can click the link to go to our Discord channel. Dylan says Neil has lots of good things to say about you, so I'm a big fan. I appreciate that. It's Neil and I have, like, when you start working with somebody and you realize, like, right away that you are going to be like you're going to be a good team. And Neil was one of those guys that, like, it's difficult when you are trying to start on a new platform. And I'm still relatively new to Benzinga. I've only been doing this for a couple of months. I've had, I was on with Luke, and I was on during the lunchtime shows, and I've been on Neil's show a handful of times now, and I've done this for 3 weeks. But it's difficult when you first are just getting into a platform. And when Neil and I first started working together, I just knew right away. I just felt really comfortable with him. So I appreciate you saying that, Dylan. And yes, Cameron, our Discord is free. Everything that we do is free. All of my YouTube teaching is free. All of our anything that we do in the Discord, it's all free. We just want to help people learn how to trade. We're not like, gurus, if you want to call it that. We're not here to, like, promise you millions of dollars. We're not here to take pictures in front of Lambos. We're here to do what we're doing right now, is to answer questions and to teach a little bit about what it means to be a successful trader. So that's another thing that you have to remember when you are buying options, is that the theta is going to cause the option to go down. Okay, there's going to be an automatic decrease in the value of the stock if the stock is not moving, only moving a little bit, or if it's dropping. Okay, so your goal was to capture these small little waves that the options do. Okay, and it's 10 to 30% is what is happening with an options contract. That's my goal. Every day I'm looking for a 10 to 30% window. I'm looking to capitalize upon a 15 cent to 30 cent increase on these contracts. I am not waiting for a contract to go up 400, 600%. I am not Lee. The website name is Trading Grounds, TradingGrounds.live. tradinggrounds.live, and that is where you can access our Discord channel. You can access all of my charting that I do through TradingView. You can access our Facebook, Twitter, Instagram page. Everything is on there. Go ahead and drop that link down. If somebody from our somebody says no clickbaity thumbnails. Yeah, I don't do. I'm not. That's one of the things that I kind of strive to be is different. There's plenty of people on YouTube that are teaching about what it means to be like a stock millionaire, and you can trade for 10 minutes a day, and you can travel around the world and just play from your phone. And I'm not that guy. I'm not that type of a trader. I'm not that type of an educator when it comes to trading. My goal is to be realistic, that, hey, listen, you are going to get it wrong. And there's a lot of times you're going to get it really wrong. And I've gotten it wrong. And I did yesterday and today and tomorrow I probably will. But ultimately, our goal is to understand why we are entering trades, where you exit a trade, have a risk system defined, have a plan defined in advance when it comes to how to trade options. Okay. So again, that's where I want to stop with this specific topic of how to do long butterflies. Keep in mind, Miles, he says no Lambos. I don't do Lambos. I'm sorry. My wife and I were just talking about this the other day. It's funny that that is such a big market. And if you're not familiar with it, it's probably a good thing. But real quick, when I say that about like people with Lambos and stuff like that, is I know it sounds surprising, and I say that very sarcastically, but there are people on the internet that all they want to do is scam you out of your money. I know, right? And what they've done is they've taken these paper platforms and they have now basically created fake gains. And they have 20,000 followers on Instagram, and they're selling a course, and they're guaranteeing that you're going to make money. And you only have to pay the low price of $1,500 or $500 or whatever it is. And we call them furus. That's the tongue-in-cheek way of describing what happens a lot. So when I'm teaching, just to kind of give you an overview of what I am doing, I am here to educate. I don't do alerts. I don't send out like get in now. Like what we do is we're trying to teach you like, okay, support and resistance is here. Moving average is crossing over now. Stochastic is doing this. MACD just flipped. We're trying to get you to understand that, like, first off, you need to have a system as to how you are trading. Okay. The last thing you want to do is just blindly throw money at a stock that somebody tweets. The last thing that you want to do is to just enter a stock because somebody told you and not know already where your profit and where your loss is going to be. Options is no different. So another aspect of tonight, so we've got about 15 minutes left. Another aspect of what I want to do is I want to talk about how you create a options trading system. How do you look for those options that you can trade, and what does a tradable stock when it comes to option? What does that look like? Okay, so let me click back over here to. Oh, that was a lot of activity for today. Now. RIP Hertz. For some reason, Hertz is still on the high options volume on Tasty. I just, as of today, told them that again, and they know it. I don't know why it's on there, but does anybody remember when Hertz was a big thing? If you if you remember, drop HTZ in the chat if you remember Hertz. That was a lot of fun. That was crazy. That was crazy times thinking about all those stocks that were running all the time. Much different market. But what you're looking for is a list like this. You are looking for, this is on Tastyworks. They have a pre-populated preset of a watch list, and you are looking at high options volume. Okay. Now, obviously, with the stocks that you are going to see towards the top, you are going to see the big names, and that is important because that's where you want to focus your time, energy, resources, knowledge on. You want to be towards the blue chips, okay? And I know that might be a little bit difficult to understand because especially if you have a low dollar amount in your trading account. If you have like a very small account because you're just getting started, I was just talking to somebody the other day and they asked me like a question of like, how much money do you really need to start trading with? Like, what do brokers require? I told them like, you can throw $100 in there. A broker will give you an account. Some accounts are required to have, over 2,000 if you want to do margin accounts. Some platforms make you have the full 25K. But like, I mean, like, it's not you don't need millions of dollars to get going with trading. You don't need all of this capital to start trading. And so when I say that, and I always am recommending that you play the big dogs, people are thinking like, well, I can't afford to buy $130 worth of Apple. Okay, you don't need to. You just need to look at what you can afford to do. It's let me pull up Apple and I'll show you what some of these contracts are. Okay, let's go to the 16th, and here are your contract prices for Apple. Apple is one of the most traded, not only commons, but it's also one of the most traded options. If we go over to, I'm going to keep this open right here now. It actually was the highest volume. It had the most volume out of the high options volume. So that's important to remember too. I want to show you the IV index though. Poor little Hertz is 433%. Ignore Hertz. I really wish they would change that. What we're looking at here is this IV index. This is showing you how much of a movement the stock has. Okay. It is showing you that these stocks have a lot of volatility. And that you can capitalize on movements, okay? But you can also do what's called, you can be left holding the bag, okay? Let me give you one example. And this was, I traded this, so I can talk about it. SOS. SOS right now, the implied volatility on the contracts is a whopping 259.5%. And in layman's terms, that is friggin' awesome. You want to see contracts doing this. Okay. This is, that's really good. That's really, really good. And what that means, and I don't want to confuse from the other end, I don't want to kind of, if you are selling contracts, when you see a number like this, that's gravy. That is just, and somebody just said options gravy. Tony said options gravy. That's exactly right. That's gravy, man. You are going to be capitalized on movements so quickly. But what happens here is, I want to show you this. An in-the-money contract for SOS is 40 cents. Like 40 cents for an in-the-money call. It's already there. Like it's you don't have to wait. It's already in the money. Look at how cheap these calls are. Why is it so cheap? Like what is going on to cause this stock to be like that? Well, let's look at SOS. What did SOS do? That's SPS. SOS. I did SPS again. What am I doing? SOS. There we go. Okay. There's your spike. and what happened? Real quick, just a little bit of a technical analysis. This stock went down. Doesn't take many indicators to see that. The problem that we see here is that there was these a little spike here, down, and we're going to try to recover. Also, just to let you know too, I have my candle colors. I use blue for stocks going up, and I use red for going down. So if you see that blue and you think like something's wrong, like I stare at charts all day long, and so I like to change the colors up a little bit. I know what they're doing. I don't need to see green and red. If you need, you can make them whatever color you want to. They're going up. You can make them black. I don't care. The blue though is the stock going up. You see this big spike here. That's what caused SOS to get on the radar. And SOS for a little while actually seemed like a very strong stock, but as you can see with what these lower end stocks do, they sell off almost immediately, and then they get to a new bottom, and then it's kind of all over the place here. Volume wise, volume's decreased, can't hold anything. There's no support. It can't break above top resistance. And so what happens now is these options have become super, super, super cheap. Now, I played them again. This was a reason, and I'm telling you this because this is an area of my trading that I use. When we see an IV percentage of 259.5, I'm jumping all over that. I'm buying contracts. However, you have to remember that this contract right here, okay, the most expensive contract right now for SOS is the $1 strike for $4.40. There was 6 contracts sold. That's not good. See these contracts down here? See all these big numbers, 24K, 16K, 6K, 6K, 8K. There's a lot of volume in this section right here. The problem though, the trading range is horrible on these. The range of movement is not really that much, okay? You can buy one of these contracts for $10, $15, $5, $35. You can buy a contract for really cheap. But part of your option strategy, part of how you find options to play, if you are going to go with something like this, the IV percentage on these stocks is is the blue chip stocks. Let me show you just real quick. Let's go the other way. SPY, it's 16%. Apple's 33%. American Airlines, 66%. What else? Microsoft, 28%. So Tesla, 66%. You can see we're starting to increase. And basically what that means is you have to capture quick movements on a stock that you're buying a contract for 10 cents. It's not going to $3.20. Like, unless like some reason SOS tomorrow morning does this, yeah, it'll probably get back up there. However, just from a very quick technical analysis perspective, there's not really much to talk about here that makes me think that that's going to happen. So again, just remember that when you are seeing these options, that they're 10 cents, they're 15 cents. A way to do this is going on FinViz or going on Bar Charter or going on any of these other platforms and flipping the scanners upside down, so you start with the lowest possible bid and then playing those. That should not be a part of your options trading strategy. That's not how I identify options that I play. I've got a pool of stocks. I've got 25 or 30 stocks that I have on a watch list, and that's all that I focus on. I am not concerned with, now let me rephrase that. I am concerned because I run scans and I look at data and I look at volume and I look at open interest. I am concerned with those things. I want to know when a stock is spiking. I want to know when the option volume is unusual. I want to know when the IV percentage is going nuts. I want to know those things because I want to do the quick plays. However, my main focus when I sit down in the morning is between about 15 to 25 main stocks. And what I normally do is on the weekends, I adjust those stocks. If I need to remove a stock, SOS might have been one of those that I would remove because I did play it and now I would not get back into it. I hate to say this, but NNDM, if you know me, NNDM is one of my all-time favorite stocks. I played hundreds and hundreds of contracts. It's off the list. NNDM is just, it's free falling. It's being algoed to death. It just does not look like a good stock right now. It's off my list. It was the list. It was number one on the list for a long time. It's not on there anymore. So what I like to do is I like to focus on stocks that I know. I know what's going on with a lot of these stocks that are on my list. I know that I can capitalize on, because again, you have to remember, I'm trying to capitalize on a 10 to 30% movement. I'm trying to capitalize obviously more if I can. I sell, contracts and have 80, 90, 100%, returns. But my goal on a daily basis is 10 to 30% on these movements. So I'm trying to capture a lot. So don't go in here and buy this contract for $10 and then hold it until, well, tomorrow's April 9th, so that's a bad example. Let me click over down here and let's go to April 16th. You're going to buy this, let's say you're going to buy the $6.50 call. It's 30 cents. So you spend $30 on it. Don't hold this thing until next Friday because you think that the stock or the contract price is going to go up to like $2.20 and you're going to make $180 real quick. Like you're not going to. Like it's not going to happen. You are basically then just wasting the contract price. Your max loss is identified. Absolutely. You can't lose any more money than that, but you are not going to make yourself profitable because you are holding for a gain that is unrealistic. So when you are building and when you are trying to find the options to play, remember on these stocks that have super high IV percentage, your goal is to capture quick movements, because what's going to happen is on these stocks that have a high IV percentage, you are going to capture a real quick spike. The high IV percentage means this stock has the ability to spike or it means drop. Okay, so you can do either way. It's not necessarily mean that this stock is just going to go up 202%. That's not what that means. What it means is the stock has the ability to fluctuate real quick. So if you're on the long side, if you're buying calls, your goal is to capture a 10-cent movement, a 15-cent movement. So maybe when you're going to buy one of those contracts, you buy that $6.50 for $30. Maybe you buy 10. Okay. And then when the stock moves 15 cents or 10 cents, you see what's happening? Your gains are amplified. You're not waiting on that one contract to go 200% when in reality, it's probably not going to do that. So the IV percentage is important because it gives you an opportunity to capture those quick movements. Like when Kodak ran last year, the IV percentage was crazy. GameStop is typically a real high IV percentage because it's all over the place right now. So yeah, you want to know about those stocks, absolutely, but you don't want to build your whole entire foundation of trading options specifically on those. You want to be more in the consistent, the big names. You want to play the tickers that have the high volumes. You want to play the triple Qs. You want to play the NIOs. You want to play the what else we got on here? The AMC. You want to play we got other good ones on here. Twitter is a good one. You want to play the Genus is on here too, which is very interesting. What's the Genus option chain look like? Yeah, see, April 16th calls. We're tomorrow. You could buy. Okay, so there was 5.3 thousand contracts sold of the $2 strike Genus contract, and they closed at a penny. Okay, they closed at a penny. GHVI. Somebody said, do they have options? GHVI. Yeah. Okay. GHVI is at 93% for April 16th, May 70. Let me try to see if there's any volume on these. Not really. This isn't too bad right here. Okay, this $15 strike. What's it at now? $13.85. I mean, that looks like SOS. Look. They almost look exactly the same. Okay, so remember that's why these contracts are low in price, because a lot of times you have the contract is 15 cents. So it's $15. There was 135 sold today. Has a 20% chance of being in the money. Your $12.50 is $1.35, but you have to remember that this is $2.50 spread here between the chain. The $10 one's $2.90, but they didn't sell any. There was none down here. So I would be, I'd be leery of getting involved with a stock. Now, I mean, again, you have to remember like $15 if you want to pick up a contract and have it in there. I mean, at the end of the day, that's not really that bad of an idea. However, to capitalize on a movement, you're going to want to have more than just one. What you want to do, let's look at Twitter, for example. Let me show you a Twitter option chain. Twitter is going to be 47% for April 16th. However, look at the amount of volume that we have on various chains, okay? So even all the way down to the 80 strike, you are at 71.45 right now, and the 80 strike was $21. There was 1.08 thousand contracts sold. Trying to get in the money, you are at $1.93. That's a pretty good range, okay? From the 23-cent contract to the $1.93. That there's some movement there that can happen. This would be a stock that you would want to include on one of the ones that you make on your watch or put on your watch list. Why would that be a good example? Well, Twitter, of course, is one of the bigger names. Twitter reacts to news. Twitter has news. They have events that cause the here somebody just said would be great if some example is shared, like if long bias on Tesla, what call would you buy and which call would you write? All right, so let me show you real quick because we're gonna have to wrap up here. Let me just use Tesla. So like for example, I would not hold a Tesla call through the weekend. I typically don't hold many calls through the weekend, but Tesla specifically I would not. There's too much volatility with that. So let's just say, for example, today I played the 700. I bought the 700 at around $1.15, I think it was, and it's all the way up to 211 now. So this is what did Tesla do after hours? Does anybody know? Okay, so Tesla is consolidating, riding the 8 pretty nicely. Overall, it looks like it's in a little bit of an uptrend. So this contract has a chance to the 700 It's 211 right now. The theta is see that value right there. Oh, I'm sorry. See that value right there, 132. That's not good. You don't, when you are buying contracts, theta is your biggest enemy. Okay. When you are selling contracts, theta is your best friend. You want that contract to get as close as you can to expiration. I mean, ultimately you want it to expire worthless, but when you are buying contracts, theta is your enemy. You're losing money. Is like I use this example all the time. When you buy a brand new car, when you drive it off the lot, the second that car gets off the lot, it's lost money. It's the same thing with an option. When you buy an option and it's in your portfolio, it automatically is starting to lose money because of theta. Theta on a Tesla contract is unreal. Okay. It is, you are going to see these movements. That's why I don't hold these things overnight. That's why I don't hold them through the weekend. I do hold, a good number to look for is 30 days. 30 to 45 days is kind of the sweet spot if you're just starting out with options. 30 to 45 days is where you want to look to see what contracts you can buy. That's going to give you enough time to, number one, not go crazy because the stock is going up and down like crazy and the contract price is going crazy as well. It's going to give you enough time to adjust to that. But number two, it's also going to give you enough time for theta to not absolutely destroy any chance of profit that you have. It's tough to buy these contracts and day trade them unless that is what you want to do right from the beginning. Okay. You have to identify what type of trader you're going to be. With options, you can have a whole mix of strategies. You can play so say, for example, if you want to buy contracts to play earnings calls, you can do that as well. Say, for example, you only want to day trade Tesla premiums. My goodness, that is going to be difficult, but it can be done. It can be done. Volatility is so friggin' high with anything Elon touches. It's true. It really is. I mean, anything that he does causes the stock, causes the Dogecoin, whatever it is, causes it to run. That's what's happening with Tesla. I don't hold Tesla calls really overnight. I might, if I do hold them overnight, it's because I bought it right before close. But I don't buy a contract at like 9 o'clock, or I'm sorry, at like 10:30 in the morning and then hold it all day with the interest of selling it the next day. If I've bought a contract in the morning, I'm holding it for a couple of days. I'm not just flipping it overnight, or I'm not buying a contract first thing in the morning in order to sell it the next day. That's just not my style. If I'm buying a contract in the morning, it's gone on a big candle. It's gone in an hour. It's gone in 2 hours. It's gone in 2 minutes sometimes, depending on what's happening. If I am holding a contract overnight, it's typically because I bought that contract at 3:59 on the last possible second. Then I flip it over in the morning because I've got a good an indicator went off for me, and I like to look at the chart, and so I think tomorrow it's going to gap up. It closed on a really big candle. It's got a good volume. It's got whatever indicator I'm using at that time in order for me to say, yeah, I think this risk reward. I think the stock is going to have to move up enough in order to cancel out the decay. And I also think there's going to be a little bit more of an upside, which is going to cause the contract to go even higher. You guys remember those things. And I know there's so much when it comes to options trading, but listen, the best thing you can do is right now, let's start. This is our homework. Okay. We're going to start every single week. We're going to have our one last thing that we are going to work on as we close our show. Somebody said, would you buy Tesla leaps or shares? I personally would do neither. I would, if you're looking to invest in Tesla from a long-term perspective, buying shares is probably the way to go. I don't do that either way, so I can't really offer much. I personally would do neither. I would not play leaps. Leaps are really far away calls. That's what a leap is. It's outside of 180 days to 300 days out, depending on how many options are available. A leap is a really far away expiration contract. That's what it means to buy a leap. But the thing that we're going to leave with, because we're 6 minutes over, and I know that Spence is going to be jumping in here any second now. I have the last show of the day, so I could talk as long as I want to, but it's dinner time, and I have a newborn, and we have all kinds of stuff always going on in the house. So this is the homework I want to leave you with. What we are going to do is we are going to identify what type of options trader we are going to be. Are you going to try to be a swing trader when it comes to options trading? Are you going to be more of a day trader? Now, one other thing I want to tell you about options trading is the PDT rule is applied to options trading as well. So you get 3 and 5 days, and then that fourth one, it dings you. However, if you are looking to just get started in options trading, the best thing you can do is have a cash account. Don't have a margin account. Options settle in 1 day. So instead of waiting the 2 days for your funds to settle, you only have to wait 1 day. Mash, I appreciate the kind words. Appreciate you stopping by. We are here every Thursday night at 5 o'clock. I'm also, Tony says, congrats on the newborn. Thank you very much. He is 6 months. Actually, the 6 months this Saturday. It's crazy. Somebody said, correct me if I'm wrong, but when you're buying options, it's not only theta, but also IV that can screw you. Yeah, absolutely. That's a great observation. IV can, because it has the ability to go up or down. IV high percentages does not necessarily mean that the stock is only going to go up. It means the stock has the option of tanking and the contracts pulled with it, and your contracts die worthless. So as I was saying, you want to identify what type of an options trader you're going to be. Again, do not focus in on all these strategies. Start with getting a great understanding of what it means to buy and sell contracts. That's it. Individual calls, individual puts, buying calls, buying puts. Let's just focus in on that first. Identify what type of options trader you're going to be, and then you can work out from there. So somebody says, so what would you do instead of leaps or shares? Do you mean, John wants to talk about my facial hair. Just start at the beginning. All right. So I started growing a beard I've had a beard now. Gosh, I don't even know. Everybody jokes that I was like born with this beard. And that may or may not be true. That's just one of those like urban legends that you just have to appreciate for what the possibility of the truth is. But I've had this beard now for, quite a while. I trimmed it up for my, it's funny. This is a fun story. When my wife and I got married, we got married 5 years ago, October. When this is the normal length for my beard. This is what it's just here. I don't have to shave. It's just, I'm the boss, and well, technically my wife's the boss, but I don't have to like be cleaned up for work because I'm at work right now. When we were getting married, my wife said, you have to clean your beard up. And I was like, all right, I completely understand. So I went to, my brother-in-law told me about this really good barber. They do a great job and everything. Go to this place. They'll take care of you, because you can't let anybody touch your beard. Somebody's got to take care of it. They got to do a good job at it. So I went to this barber and I got cleaned up. And I'll tell you what, when I walked out of that barber, I felt like $1 million. I was like, this looks I might actually keep my beard like this. I thought it was fantastic. That was part one of the beard trim. There was a second trip because my wife said it's not short enough. Listen, you gotta do what makes the wife happy. That's her special day. Obviously, like it's our day together, but that's like guys, listen, like your wedding day is your wife's day. Whatever she wants to make her happy, not just on her wedding day, but on any day of the week, you do that. If your wife is happy, then you are living a good life. I don't care. Like, I have an amazing life. I treat my wife with the utmost respect. I do anything for her because I like the life that I have. I mean, what the heck, take care of your wife. So she wanted me to go back and trim the beard a second time. That was probably the last time that I really trimmed my beard. I trim my mustache. I trim the sides up a little bit like that, but for the most part, I just let it grow. I've had it now for the original question before I got sidetracked. I don't even know how long it's been a long time now. It's been this length for, at least 5 years. People know me as the beard. And what's really happened is these big streaks of gray. I'm obviously not a young guy any longer. And so, the gray just like popped in one day and it's not going anywhere. And honestly, I've just embraced it. I'm okay with it. I'm fine looking like an old dude. Like I don't care. Like I've embraced that for all that it's worth. And so, so I'm a big fan of the beard. So I hope that answers your question about the journey of my facial hair. And I didn't start until late, and I've actually gone pretty much bald on top of my head, but I can still grow a beard. So that's more important in my opinion. So any other final questions? Spencer, if you're there, if you want to jump back on, I am, oh, look who it is.
Hey, you got producer AB. What's up?
Hey, what's going on, man? How are you?
I'm good. How are you?
Good. Real good. Thanks.
That was some good advice. You know, I'm a young guy, so I'm just keeping that in the back of my mind about wedding day, wife, everything. Cause
man,
that's down the road for me.
Yeah. Yeah. But I get it. It took me a while too, but yeah, just it's good advice to have.
Well, yeah, I mean, man, that was awesome. Let's it looks like no one's got any final questions. So let's go ahead and wrap up and we'll be back for more options. What, next Thursday?
Next Thursday. Yeah. And then also don't forget about the boot camp this Saturday too.
Oh yeah. You're going to be at the boot camp this Saturday.
I'll be at the boot camp. Yeah. I'll do a little mini session again. Last time we did a little bit of basics. We'll probably do a little bit of a similar talk. However, I do have a couple of new points that I want to talk about as well. So if you did watch the last time, there will be some new content as well. But it looks like the link is posted in the chat. And yeah, I'll be there this afternoon.
Yep, I just threw that boot camp link in there, and I'll be there as well. So I'll see you Saturday.
I'll see you Saturday, brother. Thanks for your help. Have a good night.
Of course. All right, Zinger Nation. Have a great night, y'all.
See you guys. Thanks, guys.
Peace and love.